doing well. We've got a lot of news to cover today. Got big news from an insider, a mortgage insider that sent me an email about what just happened at Citizens Bank. If you remember back in, I believe it was May or June, I called that Citizens Bank was going to be having trouble. I didn't know exactly which part of Citizens because that name is actually pretty synonymous with banking. And then we saw Citizens Bank go into receivership, have some problems, and officially close. I'm going to go over that news. I'm going to talk about what the insider told me after I go over the lies that are being perpetrated in the real estate market. I'm going to use two stories as an example. Totally shockingly different, but it's the wording. They're trying to grab clicks, they're trying to pull on people's emotions, they're trying to do anything they can to get you to buy a house. And it's very, very interesting how all of this is unfolding. And it is happening in rapid format, but the thing is most people that don't understand it, they don't see it happening in rapid format. They think that everything's fine just because their neighbor had a house for sale and it sold, but they have no idea about transactional volume and things like that. Really quick announcement for everyone that has the course on Teachable, the real estate side hustle, or even the how to start a side hustle course or the real estate crash course. I got flooded with emails because you didn't get the deal that I emailed out for the new course, the real estate bear market course. It's because you have your notifications off. Just go into Teachable, hit the notifications, turn them on. That's the only way I talk to my students. So I need you to do that because I got completely buried. But with that being said, the response was insanely overwhelming and it is absolutely humbling. And it makes me feel so good that I'm able to bring you content that's going to continually give you the tools to crush it in this real estate crash. So many of you have already started using the tools and are buying places, but you're buying them right and you're identifying the right cycles. So also, with that being said, this last part of the year, this is the last time I'll ever sell that course, the real estate crash course, for $199. I'm not joking, it's going up over 5 times based on work that I'm doing with consultants and people that are much more successful than me that took the course and said they're gonna take it mainstream. So I thank you for that. All of this is coming into fruition and I'm so grateful to all of the support you guys have given me. So let's dive right into this news. So first set of news I've got, and this is where I want to show you how they lie to you and how you need to realize that we are in a time in the economic crash where the evidence is all around you, but because you have 95% of the world that's completely just disillusioned and completely lost their mind out of their gourd, and this is why real estate crashes and stock market bubbles pop and these crashes happen, is because the masses haven't figured out and then they push out when it's too late. I just saw another announcement that, what is it? Warren Buffett's company, Berkshire Hathaway, is now liquidating. They just came out with and they always tell you when it's too late. They've already done it, right? It's like Nancy Pelosi's trades. They just, oh yeah, we've sold all of our GM stock and they're selling all these other stocks, adding to that cash hoard. They know this crash is right here and the sheeple are all about to figure it out in 2024, all right? That's why I wanted to bring you this news as it happens and then be able to show you what's gonna happen in the future. It's actually very easy to identify. That's what I did in 2006 when I sold all my homes. It was so easy to figure it out. But the thing is that this is not taught. Real estate cycles and economic cycles are not taught, and that's why I know it's gonna make you a lot of money. Here's the first story out of the Washington Post. It's entitled, "Baby Boomers Are Buying Up All the Houses." Now, again, we're gonna get to the Citizens Bank information. It's really important. It has to do with all of this. This year, the median age for a repeat buyer was 58, according to data released from Monday from the National Association of Realtors. Just so you know, they're all under fire and being sued right now. It is massive. They are already being awarded, the people that are suing these big real estate firms for coercing or colluding to take money from sellers. It is a multi-billion dollar deal. This is massive. And you're gonna see in the next 3 to 4 months, even more real estate companies sued. You're gonna see more shakeup in the market. You're gonna see buying agents completely almost be non-existent. If you're a real estate agent right now, you need to understand how to completely change your dynamic. I teach that in these courses, how to think differently about these things and make yourself so valuable in the market that people are begging for your services, all right? It says here for the last 36 years, and they pull on your heartstrings. They give you a story. Rick and Laura Zenick had a life in Nevada, but when their son and grandchildren decided to relocate to Oklahoma City, the Zenicks decided to follow them, putting their 4-bedroom house on 1/3 of an acre for sale. The decision worked out well. That house sold for $480,000, giving the Zenicks a windfall. They found a more manageable 1-story home in Oklahoma for $275,000. That was close to their family. For the first time in their lives, they paid all cash, dodging soaring mortgage rates. Just so you know, in 2024, this is going to be a massive story about older, aging people in their silver years selling their homes, not because they want to move, because they have to move. You see, inflation is tearing them apart right now. A lot of them on fixed incomes, and so they have to make the hard decision to relocate, which is going to even exacerbate the problem, the real estate crash. It's going to add to inventory. And as those baby boomers have their house on the market, and days on the market are getting stretched massively right now, if you're a real estate agent, let them know the truth down below. I love that the real estate agents, brokers, and loan brokers that are part of Ninja Nation are always telling the truth. They're always telling you right in the comment section. Just read the comment section of what's going on, all right? They're telling you the truth. Don't believe your agent necessarily. Find a better agent if they're lying to you too. Said this move was meant for us, said Laura Zimick, 77. I'm not gonna tell you the whole story, but this is what it goes on to. That's just a real quick pull on your heartstrings, right? This year, the median age for a repeat buyer was 58, which was down slightly from last year's record of 59. So it's affecting a larger part of the population. And that age is gonna go down and down, getting into the 55 range because of inflation. So that's that one story. It makes it sound good, right? Baby boomers, that's the title. Baby boomers are buying up all the homes. That's not true, okay? This is the proof. This is out of Redfin. Here's now just go by the headline right now and think about this. Type 1 if you think this is a healthy real estate market based off of this title that I'm about to tell you, or type 2 if you think it's screwed. More than 1/3 of home sellers are giving concessions to buyers. Type 1 if you think that means things are good. Type 2 if that means real estate's going down. 1/3 of sellers in the market right now are giving concessions. That means they can't sell their houses. I just did a video the other day. 1 in 7 investors, home flippers, are losing money on their flip. They're actually selling the house at a loss. And just, you know, that data is from March. Since then, a mortgage has gone from 4.5% to 7.5%. Okay, this is exciting times, but you have to wait. The time is not right to dive in. All of you that have been preparing for this real estate crash, getting your credit score all tightened up, getting out of debt, lowering your debt, you know, getting into less debt, getting all the identifying markers of how the real estate cycles work, and you start seeing it. And since last December, when I made that pledge to you that I'm going to teach you how to see different, think different about real estate, which builds patience, right? You are now seeing this happening. When it overflows, and we're going to get to the Citizens Bank because banks are crashing. This is your 2008 moment. But remember, the bottom in the housing market didn't happen until 2010 to 2012. Really sitting in that 2011 timeframe, but you had that much time. So that means that you're not going to be diving into homes, and that's why I'm building the real estate bear market course. And to get ready to go mainstream with this, because nobody's teaching cycles. Because then I have enough time to be proven right, just like the real estate crash course. So many people have been emailing me and thanking me for that. Matter of fact, man, I printed off a thank you the other day. I wanted to read it to you guys, but whatever. Okay, here we go. This is out of Redfin News. Sellers are handing out freebies to woo buyers who have become increasingly likely to back out of deals as mortgage rates have climbed. Oh, and just so you know, mortgage rates aren't crashing. They're not. They're down 0.25%. Is that a crash to you? Because I hear it all the time. Someone cites, and I don't care. People, there's some real idiots out there. Hey, type 3 if you agree. There's some real idiots out there. They'll sit there and go, hey, Ninja, you didn't call it. Mortgage rates are crashing. I'm like, it's 0.25 point going to get you to buy a house? You aren't that bright. And rates are actually going to go higher from where they are. I'm sticking to my stance right now that you are going to see double-digit mortgages in 2024. That's going to be exciting. Why? Because the bond market's in melt up. I don't care what the 10-year bond is doing right now. This is a seasonal adjustment. I'm about to do a story on Economic Ninja to show you how they totally lied to you with the CPI. And we have proof. They stated, part of the CPI, the print where like inflation's down. They said in there that insurance costs dropped, I want to say it's like 32%. Did your insurance costs drop? They twisted the information and how they calculate the drop. It's absolutely insane to me. You know, I remember in 2006 when I was selling my houses and I was like booking to sell. I remember my last flip, I only made $7,000 on. I was slated to make like about 25,000 bucks on that one. It was a quick flip. It was like 5-week process. My profit was gonna be like 25 grand. I walked with like 6,000 or 7,000 bucks because we were trying to drop prices and give concessions, just like sellers are right now. And yet, Lehman Brothers did crash for another couple of years. I was the crazy one when I said markets were crashing. In 2007 and 2008, people that I knew that weren't listening to me and finally tried to sell their house, they couldn't, and they lost their house. By 2010, they were kicked out. And so this is incredible. It still blows me away where people don't see it, but you guys see it. My students see it. This is what's exciting about this. So it says here, this information to Redfin is according to data submitted by Redfin buyers, agents across the country going back through 2020. A concession is recorded when an agent reports a seller provided something that helped reduce the buyer's total cost of purchasing the home. That could include money towards repairs, closing costs, and or mortgage rate buy downs. Remember, that's how the new home sellers have sold so many homes in the last 6 months, because they teamed up with these banks under their umbrella and they offered 1-year fixed rates, low fixed rates, like 5.5%. And those are gonna adjust next year. And there's gonna be shock because everyone's expecting the Fed to pivot. And I'm telling you, go and look at the chart of the Federal Reserve Fed funds rate when it held steady before the Great Recession. And they're gonna do, and he's already said, they're gonna do it again. It just blows my mind that nobody's listening. And here's the other thing. Remember when Jerome Powell said there's gonna be pain? And he announced that right before they started raising rates in 2022. And I was telling everyone, this is no joke. He's telling you the truth. He knows and I know exactly what this is gonna do to the market. So here, type 5 if you believe that people are feeling pain right now because of these rates going up. Type 6 if you think, no, everything's fine. And if you type 6, you probably shouldn't even be on this channel because this isn't doom or gloom. These are facts. And I like to deal with facts. When I put my money into the market and buy a house, I want to know exactly when I'm getting my money back. I am an investor, not a speculator. And that's what I want to teach people, because this opportunity is so big that's coming. I just can't wait to be around all the people that took advantage of it. It says sellers have become more open to the idea of giving out concessions like cash for repairs and mortgage rate buy downs, in part because many of them want to get their homes sold quickly due to major life events like divorces and new jobs. Do you think that's the case? Isn't that fun that Redfin puts that little spin? Oh, people aren't selling their houses because the market's tanking and inflation's overtaking everyone's bills. It's because they're getting divorces. That's why. No, that's not why. Now, divorce always happens. I get it. And most of the divorces are caused because of what? Financial reasons. You want to have a happy marriage? Try having a lot of money. It actually does make things a little easier. But the fact is, that's not the truth. It's because there are people going, oh crap, I shouldn't have had this Airbnb, I can't rent it. Oh crap, this flip isn't selling, I need it gone now. Oh crap, what do you mean my house has gone down 5% the last year? I just bought it and I could barely afford it. That's what's going on right now. So it goes back in to say that many of the metros that are affected, it says many of the metros that are affected above saw home buyer demand soar during the pandemic as remote workers sought out relatively affordable parts. You know what, the heck with this. We don't need to talk about Redfin anymore. Let's talk about this Citizens Bank stuff that's going on, because this is a big deal. And again, to everybody that bought the real estate crash course and they were emailing me like crazy that you didn't get the notification for the new course and the deal is coming out before Black Friday, It's because you had your notifications off. Please go into Teachable and turn your notifications on. That's how I email people and say, hey, the lessons are done. New lesson just popped up, because I was always putting new lessons on. I think I put like 9 new lessons on Real Estate Crash Course. And people go, you said there was extra courses. I'm like, go back and look, it's on there. Okay, so go and change your notifications. And then also, last time before the first year that the Real Estate Crash Course will ever be $199. After that, it goes up 5 times. I'm not joking. Not joking. All right, here we go. This is an insider, what part of Ninja Nation. I won't share her name. Okay, I will. It's a normal name. Jill. That's it. That's all I'm going to say. This came from Jill, and said she works with Citizens Bank, and her representative at Citizens Bank could not get a hold of her yesterday. She works in the loan industry. When she finally returned her call, she said that they had been told on a phone call, this was yesterday, that the bank was pulling out of the wholesale market effective tomorrow, 11/16. 30 minutes after her call, her email was shut down. Citizens has not said a word to any of us on the correspondent broker side. So they're bailing from the wholesale side. They were our biggest lender. All right. Thank you, Jill, for sharing that with me. Check this out. Let's first define what a wholesale mortgage is. Why have I completely lost my path? Ninja, you've lost your way. All right, here we go. Wholesale, and then we're going to go into a story about Citizens and why it's important. What's a wholesale mortgage? A wholesale mortgage lender is an institution that funds mortgages and offers them to third parties, such as a bank or credit union. Wholesale mortgage lending differs from other mortgage options in that it requires the borrower to work with a middleman instead of the lender. All right? Now, just to give credibility, I need a little bit of credibility here. How many of you guys remember that I was warning back months before the Citizens Bank crash? The Citizens Bank, I didn't remember which part of Citizens Bank. There's like 3 or 4 of them out there, was gonna tank, right? The FDIC was gonna move in. Type 7, if you remember that. Jack at Nobody Special Finance called me that when it happened, and it happened officially last week, and he said, I don't know how you called it. I'm like, well, I had a little bit of info. And it's happened 3 times now with me, right? It says here, and this was just a couple days ago, Citizens Bank becomes the 5th U.S. bank to fail in 2023. Now, I want you to realize this. This is much bigger than 5 banks. The Federal Reserve came out last spring and admitted that the September before that, so September of 2022, over 700 banks, not banking branches, banks, the companies came out and said that we're essentially insolvent. We need a bailout. And that is why the reverse repo window opened up and just went nuts. And then the Fed said, not only are we not going to tell you what banks are involved, we are not going to disclose that for up to 5 years after this crisis is done. Then the FDIC leaked video came out from last November saying that they can't let the public know the banking system's failing. Okay, this isn't a joke, all right? I'm sort of giddy because I'm going to take advantage of this, and I know how many of you type 10 if you're going to take advantage of this. Who wouldn't? Because you see, too big to fail became a thing because all the banks bought up your houses when you lost them in 2008. And if you're not ready for this one, they're planning on doing the exact same thing. These banks love consolidation because the fewer banks are out there, the easier it is to control the entire money supply of the nation. All right? People need to realize this. It says 2 branches of Citizens Bank will reopen as branches of Iowa Trust and Savings Bank on Monday during normal business hours. The banking crisis continues in the U.S. as another regional bank shuts shop. The government has shut down Citizens Bank due to financial issues, allowing the Federal Deposit Insurance Corporation to take control without providing any public warning. Just like the insider here in the loan office said, they didn't even have a warning at all. They were just, boom, our biggest client that we deal with mortgages, just were shut down. They didn't tell them. They had to call them and finally get a hold of them, and then their emails are shut down. This is how fast this happens. Now, when we're talking about saving your money, the FDIC's right now backstopping, but even the FDIC admittedly came out in July and says, we don't got the money to do this again. We are insolvent, and we need the banks to pony up more money for the insurance. And then Bank of America and JP Morgan started complaining, saying, we don't have enough. If you're going to try and charge us more, which equated to they wanted to charge them a little bit more for their insurance, we can't compete. And then the Federal Reserve says, banks, because everyone thinks collapsing, we need you to hold 3% more in reserves, just 3%. And then they came back out. The big banks said, we can't compete with the world if you make us hold 3% of their money and not gamble it and not invest it, gamble it. Think about this. This is no joke. This is why you need to be getting ready. This is the reason why real estate crashes happen, because the only people left to pick up the scraps are banks and hedge funds using your pension money. This is not a joke. But I tell you what, as it's already happening, but as this gets worse, I guarantee you I'm not going to be the most popular person on the internet. Because even if I'm 100% right, which I'm not joking, I'm going to be right. I've been through this before. Nobody's teaching anyone this on the internet. Nobody's warning about any of this because they never were investors before. There's only like 3 people on all of YouTube that owned rental property before the Great Recession. You got a ton of kids running around telling you that buy, it's never gonna go down. They're kids. They were in high school when the Great Recession happened. Their parents lost their houses, and their parents couldn't even explain to them today why they lost their house. Well, the economy crashed. Are you kidding me? All the warning signs were there. So the question is, what are you gonna do about it? Do you want the competitive edge? Well, I'm gonna be honest with you. It's gonna cost. And that's not being a jerk. I learned this too long ago. I've done over now with the real estate, or the Economic Ninja channel has come under some pretty big attack ever since I made a couple warnings. And I'm okay with it, because I'd be remiss not to share this. I've done like 2,800 videos in 3 years warning about all this stuff. I meet you guys and ladies and guys, girls, women and men. There's only 2, just so you know, all over the world. And I'm watching you get ready, and I hear your stories of being prepared and saving tons of money. You know, when I went out and said, you better refi right now, and I made that call, I was so pissed. That one video, it went huge. 250,000 people watched it. And I've met people that have saved over $100,000 just since that moment, because it's so easy to figure this out. So you don't have to go buy a course to go be successful. Just start getting out of debt and get your credit score ready. If those are the only 2 things you do, you're gonna be ready to rock and roll. But I will tell you this, when it's time to jump in, and I'm about to start filming this new course today, it is going to be gut-wrenching when the time, okay, time to buy. You're like, wait a minute, homes are still falling. And I go up, there's a reason, and this reason, and this reason is why you're gonna wanna start buying right now. I know it sounds crazy, but there's a point, and very few people understand that. But it happens every 7 to 10 years. And I'm super excited to share it. And so, if you guys want the course, it's 80% off for the first course, and to everybody that's in that course as of next week, I'm gonna send you the link to the discount before even the pre-filming discount comes out of the bear market. I know it's a lot, but it's marketing. Honestly, it's marketing. That's all this is. I'm not here to hide anything. Am I here to sell you something? Yeah. I'm selling you a plan, a way out of this thing, a way of looking at real estate different. And I love talking to real estate agents and brokers and investors that have been around. I just got an email from someone that's been in the business for 40 years. He sells the best money he ever spent. And I thank you so much for that. And I love teaching you guys this. So hope you have a great day. I'm going over to the Economic Ninja channel to see if we can find any way the algo will share a video, because there's a lot more news to share economics wise. And I'm going to share all that stuff about the CPI and how they lied to you yesterday. And it's exciting. So jump over to Real Estate Ninja, Economic Ninja in the next 10 minutes if you got time. If not, no worries. Real Estate Ninja is out.